Welcome back, folks. How is your weekend and how have you been doing? Well, it's been a while. I haven't updated you guys, but nevertheless, I still come with my weekly videos for the past week that just ended. And with the look of things, market has moved drastically, whether in our presence or absence. But I never stay out from the charts. I always look at the price, sometime on my phone mostly when my laptop charger has issues. So we have come to the, so let me take it to the weekly time frame. And I want to basically show you guys that since my weekly videos or my daily videos does not is just a video to help us determine our next week bias. What do I mean by that? Now, every end of the week, many traders have the thought, where are we going to go? Are we the next week or the next week that is coming? Is it going to be uh an up close candle, that is a bullish week, or a bearish week? As long as you have these two, like you know very well, or you trust that the next coming week is going to be bearish, then you will understand that is you already have a bias. When you're trading this market, you need to be biased. You need to be bias based, meaning that you need to have a preference on what you want to see in price and how you want to react to what you want to see. If the market do this, okay, I will do this. If it does this, I will do this. All right. So, once again, welcome to Digital Wealth Academy. And if this is your first time stumbling on this YouTube channel or on this page, please give us a subscribe and rate this video. If you can even give us a comment. Uh, I will dive into what we have for this week. And before I tell you what I'm looking forward for next week, which is for tomorrow is Monday, right? I'm recording this video Sunday. So before I dive into what I'm looking forward for Monday, I want to vividly or I want to dig you into what has happened before. And we don't need all this side, right? Since we are not looking for higher time frame delivery of price. We are not looking for a monthly area or all those kind of thing, right? We want to know where our next week. There is no way the market will open next week and we will trade more than this area. Oh, sorry, more than this area. Like, let me take this. I don't know. I'm looking for something to call out that line for you. There's no way we will trade. Okay, my cursor can do that. There's no way we will trade more than this area next week. Let me just say these areas because we have buy side and sell side, and we have already buy side that has been taken. Now that is for the XY. We're going to be there is a correlation between the XY and euro currently. So I want to just focus you on euro first before we go to the XY. And primarily with my monthly study on price, I have come to realize that the dollar index, which is the XY, has more power in price than euro. That is, if the dollar is going a particular direction, euro will have to follow in reverse. So let's for example, now that if you let's for example there is no DXY, or just you are just looking at euro without looking at DXY, you see that everything is in alignment to expect what bearish move next week. But the correlation in price now is indicating that the XY has to go to a certain level before we before we can observe a bearish move. That is, if the SY has to go lower, euro will have to go higher. I will explain further when I begin the video properly, because this is just an introduction session. Right? I don't just want to be making these videos and I'll just jump into it. I just want to be giving. I'm not in a haste to get done with the video ASAP. But I want to give you guys quality rather than quantity. All right, because if I'm doing these videos for views, for subscription, or like there is a way I can just be doing small content and be putting on my YouTube channel, and before you know, I have attract clout, like people that chase clout. I will attract them immediately, but that's not room for that. I want quality individuals in my channel. We can also share, if you are a trader and you have been trading all this time, uh, you can reach me on Telegram, WhatsApp. All this is on the bio of this video. We can share contacts, communicate, even host a live session between ourselves. Just talk about trading, because I love to connect with people on my niche. We share our current problem we're facing, because I myself am not a master, or no. I'm just coming up. I don't even have much money on my wallet, but I'm doing enough to feed me. So I think that's where ICT said, my mentor, let me just say that, my mentor, that's where he said we should start from. Start feeding yourself first and the people around you. Like, this feeding I'm talking about is not about expensive shit. You are able to clothe yourself, like the normal clothing, not expensive clothing. You have shelter over your head, you can buy your data as a Nigerian, you can subscribe, you just, if you can meet your monthly ends meet, right? As a trader, like if you are trading and you are just beginning, I just want you to sit down quietly, calculate what is your ends meet. Some of you will decide that you will realize that your ends meet is not even up to 50,000, like $50 in a month. Like if you are able to get $50 every month constantly. Now, I'm not talking that it will be enough for you in the future. I don't know what your budget is. I'm just saying, if you are able to get $50 every month from now, some of us, or some of you, all right, you will do well. Like you will feel big wherever you are. At least a little in Nigeria here is something that is over 75 to 100K you are earning from trading. Imagine, calculate your ends mate. Okay, this is what I have. And in Nigeria, we don't pay monthly, like we don't pay rent monthly, we pay it yearly. So that gives you leverage to be able to save money. Like inside it, divide your monthly. I'm just okay. Let me bring it down. Let me take down. So what I'm trying to say is that if you are able to package yourself well, properly, there is a way you need to conduct yourself in a proper manner that will suit your trading, and it will not put pressure on you. You already know why you are here and why you want to trade. All right, so you don't need to compete with maybe traders that are above you, right? Or trade, or people that have money more than you, they like you do. So you don't need to compete with them yet. All you need to do is to make sure you stay focused on the task ahead of you. What is the task? Conduct yourself properly as a trader. Know your ends meet. How much can you, like, how much do you need to survive in a normal situation, not enjoyable situation, like in a normal, you understand? How much do you need to survive on a monthly basis? What is your expenses? Then if you can able to calculate this, then what day of, if you are a student, how can you meet your ends meet, right? You need to know how you are going to meet your ends meet every month. Now maybe if you are just starting, you might not be able to hit it easily. Just like when I was starting last year, I cannot easily hit my ends meet. Even this year I did not hit it some months back, like not all, like um in February, I did not hit. January, I did not even hit because I did not trade early January. So February did not hit. That is the one I know I traded fully, but I did not hit. You know why? I was in school. Some days I cannot be on my charts. And one of the rules for me, I cannot trade when I am not with my laptop. Trading with phone has ruined most of my psychological issues. Like it's coming from trading with phone. So all the in the essence of all this thing I'm saying is that I want you to position yourself in a proper way and conduct yourself in a proper manner. That is where we are going to get the fruits of this thing. So as time goes on, you can now begin to scale up. All right. So that is it for now. All right. This what you're looking at currently. The I don't know if you are new and you have not even know anything about trading. What you are looking at currently? The chart you are looking at is Euro US dollar weekly contracts. That is the weekly price, and in terms of time, this is the weekly. That is each and every candle represents a weekly time frame. This is a forex pair, not crypto or something. If you are new, because some people just come to my DM and ask stupid questions, but it's not stupid as long as they want to know. Nobody is stupid, right? It just sometimes because you know too much, some people question might sound stupid, but it is not actually stupid if you if you think about it in the other way. So before you ask me those kind of questions, right? Because it looks so cheap to me, but I understand. So this the week in which this I'm recording this video for is the week of 19, which that means the week begin on Sunday 19 and end on Saturday 25th, which is yesterday, May 2024, which is the third week of May. That is we are getting into the fourth week and also the last week of this month. So if that is now the case for us, I want to like say, okay, that week, right? That week has traded effectively and wide, like so clean. We have a high and a low. So let me remove this thing from this area first. Why? Just I want to teach, all right, so that you will see the high and the low of that candle. All right. So let's bring back this candle. So the week open here. So the week open, trade higher and trade lower and close. Now, this is what the kind of candle that is formed is an insider bar candle that is bearish, not a bullish insider bar candle. When I said a bearish insider bar candle, that means the the weekly candle does not take either a previous week high or a previous week low. Look at our previous week high and look at our previous week low. We did not take this any of this. And as if you have been trading, you should already be aware why this candle happened. All right, because I did not do for this week, I did not record a video for this week, and that is one problem uh, that was caused last week. So now, if we have all this in our arsenal, in our in our pocket, all this information, what can we conduct, like what can we come up with it? But first of all, let me read a statement I have here for you guys, so we begin to scale from the lower to the higher. The euro US dollar weekly contract for the week of 19, which is Saturday 19 to 25th, sorry, which is Sunday 19 to the 25th of, which is Saturday 25th of May 2024, delivered as an insider week or insider bar weekly candle. That is a down close candle, that is a bearish candle. I'm trying to make this as simple as for anyone to understand. Now, the Euro weekly contract has rallied from the week Monday 15th April 2024. I'm referring back to this area. This Monday 15th April 2024. Price has rallied from that level, delivering what? Buy side liquidity. And just from last week price traded above the previous month high. Another statement, from last week, price traded above what? Previous week, previous month high, which is this previous month high. All right. Uh, I don't know if you get my point. This candle, which is previous month week, traded above the previous month high on euro. Delivery, okay. Traded above the previous month high buy side liquidity, because that's a buy side liquidity. You can still see it. And price is trading within that specific range in price. That is, we swept that high, trade lower, but we did not move lower faster, and we keep on that within that range. You can see we move a little bit and we come back. We are still in that range. That is, we are still inside previous week range. Just like this is an insider weekly candle, it's inside a previous week price delivery. That is something you need to know. Now, the Euro previous week contract deliver a strong price rally higher towards the previous month high, which has shown a significant effect on price rally. So, this price rally on Euro has shown a significant sweep on a price range high, which presents the highest probability of seeing a sell side delivery on Euro if the bearish condition is still ideal. Listen. Now, we all know that the concept of price delivery is based on liquidity. And now, we see that the market has a liquidity here. We traded, create a swing high, rally lower drastically, clearing a swing low. Now, creating a new swing low here, and we rally higher. This is a weekly, like this range is a very good characteristic of a range in price. Now, listen, it is not a total range in price, because what is a range? A range in price is when the market take buy side liquidity and also went to take what? Sell side liquidity. Then we can now say that we are in a specified range. Reduce the volume of it. So we can now say that we are in a specified range. But notwithstanding, this is a range on a daily time frame. So let's also work with that. And it's also a previous month high, which is a significant area of liquidity. All right, that is enough. Conversely, now I want to talk about the DXY. Conversely, with the DXY, which failed to sweep previous month low, left price with a great deal of expecting more sell side delivery, which could be a run on liquidity intraday. Now, I don't know if I had to switch, although yeah, I've talked a lot about this Euro US dollar weekly contract, calling out the previous week high and all that. And also, I've explained the range in which price is trading. And also, I've shown you guys that price has swept buy side liquidity. And what is next? We are supposed to go to sell side liquidity. But before we conclude that, the next week, because all these things I'm saying is you are going to understand when I am trying to call out what I am looking for next week. You might not have the same view with me. Please stick with your own view. All right. Let's see. That makes more sense. Stick with your own view. Let's see how it all goes around. Okay. So if this is a run on liquidity, and I am expecting now to see a sell side delivery, but I want to correlate it with the XY to know how fast is this sell side delivery going to be for you, because I trade euro, not the XY. So, but the XY has a great influence on price of euro. Just like you all know, I have been talking about this for a long time now. So, that has brought me to this euro or the XY. So this is the XY weekly contract. and we can see that this week candle deliver as an insider weekly range, also tapping on a bearish order block or weekly bearish. Like we traded and almost the tick or the opening price, and we railed back. Just we traded to the opening, we rail back, opening price, and we rail back. Now this is where it is left unturned. Now, before we can conclude on what we are looking for next week, we need to also determine if the XY is going to continue this rally up, or this there is an importance in seeing the XY seek for this liquidity, as it is a clean liquidity, and there is a lot of stops. Even using one particular like looking at one YouTuber like that, I use one particular theory, is something that shows where liquidity is. It is showing that there is more liquidity around this area. So I'm just saying I don't use the indicator, but I watch numerous people trade. As a trader, if you are a trader, whether I don't trade my strategy, I can watch you trade, but that will not affect my own. If you can adapt to that, I think you will do well in trading. You should be open-minded, but don't let another person's view affect you. Just like you are watching my own video, maybe you already have, maybe if I conclude that this is what I'm looking for now, maybe you have something opposing to what I'm looking for. Like who give the fuck if you trade what you determine? Even if you fail, you learn. If you win, you don't learn. So you gotta fail to learn. So that's just it. Now let me continue. The XY weekly contract is showing a clear and clean relative equal lows, which can't be left unturned. Meaning, like what I just said, there is this relative equal low here, shows a significant effect in price. Now, with this relationship in price, EU and DXY has a significant factor. Sorry, with this relationship in price between Euro and DXY, DXY has a significant factor on EU, meaning it is logical to expect Euro to deliver a buy side liquidity during next week price delivery, which is also the last week of May 2024. I'm just interfering about the specific of next week. Now, when price trade into the previous monthly low on the XY, that will be a potential area to watch out, and also it is important to watch price closely to see if it is going to continue lower price delivery, or it is going to be a liquidity run. Let's hold on for that. What I'm trying to say is that we all know that the XY has more, like it has impact on other currency pairs. So, and I'm supposed to give you guys the calendar, but shit, that's something I have. I'm supposed to prepare the calendar already before even recording this video, so that after the end of the thing, we now check our weekly calendar to see what is in the calendar, if we have an higher impact news or a lower impact news that's going to deliver. But nevertheless, I will try to do that next week. So what I'm trying to say is that the price delivery that is going to come lower, like for me, I'm expecting markets to trade lower. Now, is this lower price delivery going to be a liquidity run, or it is going to continue leading price lower and we seek this liquidity here before this one? That's what I don't know, but I am much in support of seeing that price lower be a liquidity run. Why? Because we have relative equal low here and also a relative equal high here. You're going to see that on a lower time frame when we go towards the lower time frame. So if we have relative equal highs and relative equal low here, after taking the relative equal lows, we will now come back here. And if that will be a liquidity run, it is going to occur within Monday, Tuesday, and Wednesday. If price still remain below this area on Wednesday, that shows that it is not a liquidity run and we are probably going to continue lower price level. You understand? So I cannot just, something I cannot do is that me giving you guys a template to look at for next week. It's going to be like so obvious, right? But it's something that is supposed to be like someone can work out, right? Giving you like a template for next week, right? Because I have a template for myself that is just using a mouse to explain my template. I'm looking for Monday to derive lower impulsively, not slow. If it's going to be a liquidity run, the push lower. Tuesday create the low of the week. That is that Tuesday we purge below this buy side liquidity, trade a little bit inside. Sorry, trade below this sell side liquidity, trade below it, then reverse. Then Wednesday we now pick up from that area and deliver. Thursday we continue. Friday we now either we now retrace back or close or continue higher price delivery. All right. So which is already a template I'm looking at for next week. But there is so much behind this template that I am just using more to explain it for you now. There's so much knowledge behind that template, which I just cannot share it. It's not something that I like. I don't want to bug you with something that you are not interested in. But if you are interested in, hit me up. Now, if the XY seeks sell side liquidity, then EU will deliver higher after the opening price into the previous week high and also seek previous week old high at 1.0895, which is below the daily ICT Reaper, and that will act as a PD array that will return price lower if sell side delivery remains ideal. If and only if. Now let me go back to the euro. There is something I said about euro right now, right? I said that if the XY, now since we don't trade the XY, but we use the XY, let's say as a like something like an indicator. Now, if the XY, if our indicator is telling us that the XY is going to go lower, then if the XY is going lower, euro will go higher. So that means that we can look for this buy side to be taken, which is previous week high, previous that, and that will be a liquidity run that will deliver us lower later, or that will lead to a continuous movement in price since we have this and this. But it is going to be more confirmed if it's going to continue higher on Wednesday, previous from Wednesday to Thursday next week. So let's watch out for Monday and Tuesday. Monday and Tuesday will tell us vividly what it is going to be. All right. So before I dig deep, I want to let me take us to the daily time frame, right? Because there's something I made mention of. I made mention of ICT Reaper, and some of you be wondering, like, what, where is it in price? So, what I'm saying in essence is that if that price delivery is a liquidity run, is going to be a liquidity run. This is a fair value gap. All right. Let me remove. This is a fair a CB, a very fair value gap, and since it's a CB, this is a tool I use for that. We have used the CB, but we can still reuse that CB again since it is the PD array that is above our buy side liquidity. We have this buy side liquidity. This small punch up is a buy side liquidity. Let me return that back to its position. So now, if this is going to be a liquidity run, all right, then price is going to eventually deliver above this buy side. It's going to be fast paced. All right. When we deliver into it, then on Tuesday, create the high of the week, deliver lower. Then Wednesday, we continue. If that's bearish, is bearish scenario is ideal. So that means you can even spare yourself from losing and just wait to see how Monday and Tuesday trade. Then on Wednesday you come, kill your shit and go. Thursday come, kill your shit, go. Friday come, kill your shit, goes. That's the goal, bro. That's the goal. But we're going to get there fully. I that I'm saying it is not that I'm that perfect, alright? So I just know some kind of things I just know some kind of things will occur. Like if this occur like this was supposed to follow it. Like this is what is going to come after it. So if that will be the case for tomorrow for this week, then we are going to expect a bearish week that is going to have a long week higher. All right, that is the week. It's on the weekly time frame. It's going to show a large week upward, then a down close candle. Now, this is a daily time frame view of price, and we can see that we have see the perfect area price react for. Please, I don't want to be bugging you guys with all this past price action because there's something I usually do before, but I don't want it on my video again. I just want to do like, okay, if this is where I'm focusing on, since we are day trading, we are not long time trading, right? So let's just focus on that specific candle in price and work with it. Like instead of looking far. We all know we all should have a template that we work with. Look at this is a fair value gap. Let me shit. This is a fair value gap. Alright, I'm going to remove it. Now look at this fair value gap. The market trade above that comes. What happened here? This fair value gap has been used. The midpoint. There is a reason why I changed my this thing that my two that shows where fair value gap is. Why? Because I like this red line is the midpoint for me because I want to see how the market react and the consequent encroachments of a fair value gap. So look how we react. That is, this fair value gap was effective on la previous week Friday, right? We delivered all the way to that midpoint. What happened? We rival back. Then what happened last week? You see, last week was a perfect week to be precise. We imagine last week you should already know that since we have taken buy side, we are going to have we are going to have a bearish candle for the next week. So on Monday, take what Friday high and also tip on the buy side liquidity, which is the previous month buy side liquidity. Then rally back. If you did not trade on Monday, then you should already know that Tuesday, Wednesday is going to be bearish because Monday has already shown you the footprint of this week. Just like what I'm saying about next week, how price is going to show us its footprint. So if this is ideal for the week, now I'm going to explain all this previous price delivery one by one. But let me just for knowledge sake, let me just keep that. So I try to return that to its space. Now we react on Thursday, we deliver inside that low. Friday will do what? We reverse back into the weekly rate. That is an ideal week. Sincerely, this is an ideal week. We have high, low, just so perfect and so smooth. Right, that's it. Just let's just go. So the weekly profile I want to read for you guys, which is the past week weekly profile. I just explained it, but let me still read it. Now the weekly profile is an obvious Monday as the high of the week that reprice higher and tap on the previous month buy side liquidity level and then reject lower since that liquidity has already been swept. Now, which is this Monday. All right, just like I've explained. Now, the low of the week is formed on Thursday in EU and Friday on DXY. That is, there is a difference in price now. EU on Euro, the low of the week is formed on Thursday, while on DXY, the low of the week is formed on Friday. Because in the Thursday price rally lower in EU. That is, it's in euro, like the price you are looking at. The Thursday price rally lower into the daily fair value gap or BC and reject to price higher from there. Uh, to price higher from there on Friday. That is, we trade lower inside this fair value gap, then like we trade lower into the lower quadrant before going higher. So this fair value gap, you have the lower quadrant, the upper quadrant, the midpoint, and the upper and the lower. Let me see. We have, that is 14, the midpoint, 15, the midpoint, the upper quadrant, the lower quadrant, the low, the main low, and the high. So that is just it. The high of the fair value gap, the low of the fair value gap, the midpoint, the upper quadrant, and the lower quadrant. This 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 whole thing is so very important, especially when we are trading intraday. All right. So that has bring me to the end of the daily time frame on both Euro and DXY. But look at DXY, and now what will you tell yourself? There is a fair value gap here that will react from. This is on the lower time frame that deliver this move after taking Thursday high. Now look and vividly to say why I support price trade lower is the fact that we have this low, this low. So we are going to take this too low. I don't know if it's going to get to this reaper, but I am very sure it is going to get us lower below this buy side, this sell side liquidity, if we are going to go higher before we see higher. Imagine having equal high here and equal low. So and we have been coming towards the equal low. So let's take the equal low then before we go towards the equal high. And that is the basis for my next week bias. So now I am going to give you the basis for Monday, which is tomorrow bias, before closing this video. But we still have more to talk since we have daily time frame, hourly time, 4 hour and hourly time frame. Let me see how many minutes we have used already. This is just 37 minutes, so we still have enough time. It's not up to an hour yet. So grab your seat, sit down, and learn. All right, let's learn together. Grab your seat, sit down, and let's learn together. It is never an easy task being a trader, but trust me, this whole journey worth it. Yes, I believe it's worth it. It really do worth it. So let me go to the 4 hourly time frame to make this is a 4 hour fair value gap of basic. I want to make it, I don't want to be showing on a daily time frame, right? So let's go to, yeah, I'm okay with leaving it like this. Let's go to DXY, sorry, Euro daily time frame, and let me read the statement I have for the daily. Now, this video is recorded this is for Saturday 25th May 2024. Now, the Euro US dollar daily contract for the third week of May 2024 contract shows how Euro has delivered a sufficient price rally higher, sorry, a sufficient price rally lower into the daily fair value gap of BC and rally up from there on Friday. Simple. This whole thing has talked about the weekly uh right template. This statement alone has talked about the weekly template. Let me read again. The Euro US dollar daily contract for the third week, right? We are talking about the third week of May 2024 contract shows how Euro, that means the daily contract shows how Euro has delivered a significant price rally lower into the daily fair value gap of BC and rally up from there on Friday. That means it shows how we have trade from here, trade into the BC and rally up. Simple. And that is the weekly profile. We open on Monday, go higher, trade lower into a PDRA, right? Like a PDRA is your past price action. That's, oh, I don't want to go into that. But simple template, create high, the low, and the close on Friday. That trade back into the weekly range. Alright, so on the daily contract, we can see how price sweep previous month high in EU and begin to trade lower. That's that shows respect the daily fair value gap of BC on Friday and Thursday. Like what I'm trying to say is I'm referring to how this buy side liquidity has been swept past price. That is, the daily time frame shows how we swept that time on Thursday previous week and how the Friday also respect that and trade lower, filling in an efficiency and deliver back higher. Now, I am very pleased to see Euro traded with liquidity efficient, which is now clarifying that if the price rally up is not a liquidity run or a sweep, then Euro might be seeking more on buy side liquidity and rally towards the old daily high at 1.09427, 1.09427, 1.09427, this high. That is, if this price really is not a liquidity run and we are going higher, then we can look for. That means if Monday and Tuesday has shown us its template, then we can now determine if this is a liquidity run actually, or it is going to come here. So don't stress yourself much. Just pay attention. Pay close attention to price. Price tell you the narrative, and the weak do the damage. Conversely, let's go to the XY. Conversely, the XY daily contract shows a clear relative equal low as a potential area of liquidity of target for the beginning of the new week of the next or like of the new week. And I am anticipating for that move to be a liquidity run. If that is a liquidity run, it will be essential to look towards the relative equal high as another potential and a major price liquidity. Now, listen. What I'm saying is that the daily time frame has shown effectively how price has rallied from here towards this area and reject lower. Now, if this price delivery lower towards this area is going to be a liquidity run listing, then after taking this low, we can now expect this equal high, very relatively equal, as another potential and a major area of liquidity. But if not, then this low at 102.790, this sell side liquidity would be another area of target. Maybe after that we can look towards this, but let's focus on this. So this is something that is very um interesting. Now, Now, if it is not clear if price will trade lower up to that daily ICT waiver on the daily time frame before pricing higher, since it is also inside the weekly bullish order block. Now, what I'm saying is that we you can see a line I put here. I don't know, because of this my video it might not show it, but let me make it a line and make it thicker. Yeah, this line is a bullish order block. I will return it back to how it is. A bullish order block. Now, what I'm saying that if this price trade lower and it's a run on liquidity, it might not get towards this area, which is this daily ripper on DXY, but it will go to the daily ripper on Euro. So if it does not get there, we might, after this sell side liquidity run, you have to just to hold on, watch price before taking another decision. So very important. On the daily time frame for the XY, it has a concrete draw on liquidity, which is previous month low, this area. I'm still referring to this area. I don't know, it is so obvious to me that I'm looking forward for price to take this. And if we did not take this, wow, that says a whole lot, and I will learn from it. And I am anticipating it to be reached between next Monday and Tuesday trading. Listen, I'm expecting it to be reached between Monday and Tuesday. That means price have to deliver towards this area between Monday and Tuesday if it is going to be a liquidity run. So if the XY eventually trade this way, that is trade lower, then EU will trade up to the ICT reaper on Monday or Tuesday in next week trading. Simple and just simple as that. So for us to see Euro deliver higher, then the XY we have to go lower, right? So let's go to the hourly 4 hourly contract for this market. Well, this is why I like the software. I don't have to be afraid, like for real. What I mean by being afraid is I don't have to be afraid that time is going to expire. But one problem I have with the website with this shit, one problem I have is the fact that I cannot peacefully, like I feel like after recording this video I cannot hear myself clearly, but I am trying, and that's why I'm shouting. All right, that's why I'm shouting so that you can hear me. Just trying to make sure I put the right thing out there for you guys. So the this is the 4 hourly contract for DXY, but for Euro, sorry. We have seen how effectively it's rejected from this daily daily time frame BC. Look how that big time frame is now getting smaller and more clearer. So if you carry your analysis from the, especially if you are beginning a new week, carry it from the weekly to the daily to the 4 hour and the 1 hour. But if you are doing for the daily, carry it from the daily time frame, the 4 hour, the 1 hour, and the 15 minutes. You will have a lot of information that you can work with in the next day or the next week, respectively. So let me read what I have here. It's kind of short, but the Euro US dollar 4 hourly contract shows how nicely price rallied from previous month high to the daily BC that deliver price higher on Friday. Now, on the 4 hour contract, we can see that price has successfully rallied away from the daily BC, which significantly showing willingness to price higher. I am anticipating for EU to deliver lower into the 4 hour fair value gap and price higher afterward. That is towards the weekly draw on liquidity. Conversely, with the XY, we might not see price open and rally higher as the weekly draw on liquidity is so effective that it might not want to see price retrace. What I'm trying to say is that if we open next week, we might like on Euro, we might see price on the 4 hourly time frame, right? We might see price run a little bit lower than going to see higher price. That is anything on Monday as a trader, when price is trading below the Nigeria opening price and the New York opening price, just go on your little time frame, take small risk because you don't know if it's going to go lower or not. So I'm not giving you advice to go and trade. Let me just stop that. Okay, that will be on my own desk, not your desk. Thank you. So conversely with DXY, if we open, so like we have seen price rally. Now see where we rally from. The consequent encroachment of that fair on of that 4 hourly fair value gap. You look, the market just trade and tap on that red line and reverse immediately. That is like so algorithmic. Like why must you reverse from that area? So it's just so like it's showing us that yes, this is how price deliver. So what I'm trying to say is that this area, these two area, now if you go to the lower time frame, we have sell side. So these two area, then this one will now be the attitude path. So these two area is so obvious that when we open, we might not see price higher much, and we're going to see a rejection in price, and we're going to see price start delivering lower, which is so anything above the daily opening high on Monday, anything above the daily open and like the Nigeria opening price and the New York opening price. Imagine price being at this above this area on the XY. That's a good area to look for your short and a lower time frame like 5 minutes, 50 minutes. All right, but not 3 minutes, not 1 minute. Since you are holding it for the full daily range. So let's go on hourly contracts. I even had to put a pattern on this one, but I don't like the way this is. But on the hourly contract, I have to minimize to be able to see all this, and I wish my candle can be bigger. But that's because I'm using a smaller laptop or whatever. So looking at imagine look at this whole area now. We have a very shoulder block, so I'm expecting like we just tap on that very shoulder block. So anything above here on Monday, good area. I'm not saying you can't risk your life on it, or please just go and do your own analysis. If you trust what you see, go with it. Don't compromise. Okay, let me say that. Don't compromise. You just work with what you see, and let's see. You know that's the uncertainty in trading. So likewise, we have this fair value gap here. So if this fair value gap or BC on an hourly time frame. So for euro, if we are going to deliver lower, then we have this area to look out for, which might be possible or not. But as soon as we get here, it's going to pull higher. Now, now this is all I have to present to you guys. But now you will want to know what news are we having up next week. What is there, like what news do we have next week? So because we don't know all this, like I'm going to keep you guys engaged, and I will go to my and open my calendar. So you can just stay tuned, and I will, like, I'm trying to open the current calendar software on my phone now so that I can have a more view on it. So, being a trader, like, it's not a daily, like, it's not a day job, and it's not a lazy man's job. Now, due to a change in the time frame for trading, if you want to trade London session in Nigeria, you will have to wake up by 6 so that you put your annotation and everything, like your annotation. Then by 7 o'clock, 7:30, by 8, you're supposed to see your setup within this time frame. That's if your setup is there, you don't force its place. That is for that morning session. If it's not there, you wait for the afternoon session. Yeah, if it's not there in the morning session, it could be there in the afternoon session. All right. So, ah, Let me search for the app. What's the name of the app? Okay, calendar. Mhm. Sorry, I'm having issue with searching this website. Sorry. Issue. Sorry guys, I will tweet about it. You can follow me on Instagram. Sorry, sorry, I'll tweet about it on Twitter. I'm going to tweet about it. You can follow me on Twitter at Digital Wealth Academy, and I'm going to elaborate and expatiate more on that. I'm going to send the weekly calendar. But sorry for not being able to present that here for you guys. But it's very, very important because now we want to see if we have a higher impact news that can give us this sharp, sharp price delivery. But nevertheless, if the market wants to deliver that way, it will deliver that way. But just stay like be observant. And you can follow me for more so that after tomorrow on Monday price delivery, then I can tell you what I'm looking for on Tuesday. I can tell you what I'm looking for on Wednesday. So I'm going to be very active this week, and I promise I'm going to give the best that I can. I hope this was insightful, and if you enjoy it, please give me a follow, like this page, and help me share this video to your fellow traders. Thank you. God bless you. See you tomorrow.